What's up, BAT family? Welcome back to the Builder Trader YouTube channel. My name is Joshua, and in this video, I'm going to show you guys how to find trade entries for your trade setups. In this video, I'm going to show you guys the exact process I use to find entries for all of my trade setups, and by the end of this video, you're going to learn how to apply this same exact process to your own trading. Just give me about 15 minutes of your time, and by the end of this video, you're going to learn how to find entries for multiple different trade setups. Now, without further ado, I'll see you guys on the charts, and let's cue the intro. Alright, BAT fam, here we are on the charts. Now, before we dive into things here, learning how to find entries on trade setups is not going to be that easy if you don't already know the core concepts. Now, if you have not been watching any of my other content or the playlists, you're not really going to know how to apply this knowledge. Now, if you have been experienced and you understand trading and market structure and price action and have watched the playlists that I have made and other content that I've made, then you're going to know how to apply this strategy and this entry method right away. Okay, so we're going to go to a clean chart here first, and we're going to lay out what type of entry setups that we're looking for. Okay, so let's make a new chart on the NASDAQ here. New layout, and we're going to go to the NASDAQ 100. Now, I will use the NASDAQ as an example on a trade that I called last week for 300 points. Yes, 300 points. Okay, it was a very accurate call, and I'll show you exactly how we entered and what I saw. But first, let's write up some notes here. And if you're not taking notes on any of these videos, you need to. Okay, it is absolutely crucial. There's no way you can remember everything that I'm saying to you and then go on and try and apply it yourself. When I was first started in my first 2 to 3 years of trading, I literally have a whole notebook full of notes. Lots and lots of notes. And I still look at them now, just to reflect and be like, wow, I really came a long way. All right? Note taking is essential to your growth. Okay, so first things first. Types of setups we're looking for. First, we're looking for breakout trades. Breakout trade entries are very easy. This breakout trading is a very simple style of trading, at least in my opinion. And I find a lot of breakout setups. They're quick, they have a lot of volume, and they're easy to see, at least for me. We're looking for breakout trades. Next, we're looking for reversal trades, tops and bottoms. Now, catching tops and bottoms are not easy, and you have to recognize certain things on the higher time frame and lower time frame in order to find really good entries on these reversal trades, because it's very easy to mistime these setups and enter too early, and then you get taken out on a liquidity sweep, and then the move happens, and vice versa. You get taken out on liquidity sweep to the upside and get taken out at drops, okay? Just as you anticipated. So breakout trades, reversal trades, counter trend trades. There's nothing wrong with taking counter trend trades. A lot of times, that is what you're seeing currently in the market. So you got to trade with what you see. Okay, a lot of times these are just scalp setups. They're not with the overall trend, okay? So you have to understand you're not going to be in there for that long because you're going against the current type of market conditions. For example, if you're taking a sell in a bullish market, you have to understand that you can't be in the sells for too long, and you have to take profits at these certain technical areas based on the lower time frame. And lastly, after counter trend trades, we are looking for continuation trades, which is with the overall trend, okay? These 4 types of trade setups right here I'm about to show you, 4 different entries that you can apply to these types of setups consistently. This is exactly how I trade, this is exactly how I call the signals, and you're going to know how to do it yourself as well, all right? So 4 trade setups: breakout trades, reversal trades, counter trend trades, continuation trades. All right, that's it. So first we're going to go with the breakout trades. It's pretty simple, and I'm going to go over an example of the NASDAQ 100 that I called last week for 300 points. It was a very nice breakout trade, okay? So first things first. Now this is a plain chart, okay? So let me go ahead and mark this up really quick so that you guys can see exactly what I was seeing last week. Right now we're on the daily time frame, right? So right here, at this point, way back here in August 2022, it's an area of supply, okay? This is a higher time frame area of supply. You need to mark up your charts, based on the higher time frame, have all your point of interest and technical areas marked up ahead of time. The whole point of trading is planning your moves. You can't just wake up and hop onto the charts and be like, oh, this is what I'm doing. You already have to have your charts marked up. You already have to understand what the market could possibly be doing and the probabilities of either move happening. Okay, now this comes with experience, but as a new trader, learning this stuff and applying these concepts is not easy. It takes execution and a lot of back testing and a lot of dedication to your education and growth as a trader, okay? And that really never ends. So you have to make it a part of your life. So we have this area of supply, higher time frame, right? Next, we have another technical area right here, an area of resistance right at this spot, okay? You can actually drag this over too, but you can see that there is some resistance right here at the 12800 price. And you can also draw an area of supply if that helps you see it better, but this is where it is. Okay, next, we have an area of resistance that was broken right here where structure was broken in order to make this bullish move happen. And we have one more level of support that we can draw right down here. Okay, so as you can see, this is all that I have marked up right here, and this is how I saw the trade as well. I already done my weekly analysis in advance, and on Wednesday I executed the trade when I saw the price action line up with my analysis. So first, when price was approaching 12800, when it was right here, let's zoom out and go to the 4-hour time frame. All right, so here's where we entered right on this candle here. I'm going to draw an arrow to it right here. This candle, you see that little wick? Okay, we entered in this area. So I'm going to highlight this with an ellipse, and we're going to go over this price action in this area to see how I saw the entry at this point to catch this whole entire move. And yes, we really caught most of this move. I had originally called it to 13200, but I had told us to close at 131, and then on Friday she pushed for another 100 points and ultimately went to the exact take profit point that I had said and analyzed. But the point of trading is to make money, so you have to secure your gains. And a 300 point move is no joke. That's a really big trade, so you should be taking profits. All right, so let's look at this ellipse here. Going to go to split screen so you guys can see both sides of the coin here from a lower time frame perspective and a higher time frame perspective. So let's zoom back in. So on the right is the 4-hour chart. When we were just on, you can see the ellipse clearly. We're on the 1-hour chart here, and here's the price action we're looking at in that 4-hour candle. So what happened was, I'm going to put the risk reward tool on here. This is a breakout trade, just so you know, in case you didn't catch that before I started looking at this. This is a breakout trade setup, and this is a higher time frame breakout trade setup, which is why it moved so much. Okay, this wasn't a lower time frame trade. This wasn't a lower time frame breakout. Okay, you have to distinguish what type of trade setups you're taking based on the time frame you're seeing them and taking them on. Higher time frame trade setups move for a lot more. Lower time frame setups don't move for as much, but you can still profit on them. If the market moves in your favor, you can still make money. That's the whole point of trading. It doesn't matter if it's a higher time frame setup or lower time frame setup. You can make money on whatever time frame you want and that you prefer, or whatever time frame you see the trade set up on. Okay, so I called the trade right here on this bullish candle, right at 128. I said enter at 12800, 12770. And if you're in the Telegram, I call this for free as well. I don't normally give these trades out for free, especially on the NASDAQ, but last week I did. Now, if you want to go ahead and look at that, you can clearly see that I called the signal and had the stop loss at 12600 down here originally. Okay, I told us to quickly reduce our risk because we can see that based on the lower time frame, the 1-hour time frame, the bullish trend, point of structure is right here. The higher low point was where this blue line was, okay? You can clearly see there's a higher low point right here at the 12700 price range. Okay, so after price is starting to pull back, you see right when we entered, price pulled back. And I had some students and others DM me saying, hey, it's selling, you know, is this the right move? And yeah, it was. You have to be confident in what you're seeing, okay? Just because it's drawdown and a little pullback does not mean your move is invalid. this trade would have been invalid if this higher low point would have been broken, because the bullish trend would no longer be continuing. Let's adjust this line and make it a little straighter. Okay, so after that we reduced our stop loss 12700 to second higher low point. Now, entering here is okay. Although it was an hour early, that doesn't matter because the trade setup still worked. Our risk was managed. We managed the trade effectively. Now look at this ellipse and this arrow. Look what happened. Price broke above 128, retested this broken resistance as support, and then continued higher from there. As you can see on this 30-minute time frame on the left, all we had was just a strong bullish move after this point. Okay? On these breakout trade setups, you are buying at the high essentially. In that moment in time, it may seem like it's high, but it's not, because it's about to make a new break through its range, make a new higher high point into a new range. Okay, so after this point where it broke above, there was absolutely nothing. Okay, as you can see, let's go back down to the one chart. As you can see, after this point here, there's absolutely no levels of resistance. There was no supply, no areas of supply. It was a clear range to the upside. Okay, when price breaks out from one range to another range, it pushes very strongly because there's nothing there. So it ultimately comes just to fill that space, and then you'll see a reaction. So selling or buying in the middle may not always be advisable. But on this particular trade, I kept scaling in on the lower time frames, buying the lows, the higher low points here, here, here. This point right here, bought the highs because it was a continuation move and an impulse entry and continue moving up, right? So we'll get into that. But breakout trades, you are buying on the break of the highs, okay? So although this entry was a little early, okay, if you didn't take it right here, you could have taken it right here, okay, where the area of supply, the area of support is. I'm gonna send this to back because this is getting in the way. Okay, so you can see right here, buying at 12800, you would have had virtually no drawdown, and it just continued moving in your favor. So breakout trades, you're buying on the break of the high. At this point in time, this data wasn't here yet. So let's use the bar replay mode real quick so you can get a better idea. Some of you might have been scared on this setup in real time, because look, okay, buys, boom, pullback, bearish candle. Instantly you're going, oh crap, I'm wrong. What am I going to do? You're freaking out, you're in drawdown. You got to be patient, trust your analysis, and understand you have to accept the risk, fully accept the risk on every single trade you take. And you may have to reduce your risk some or use a smaller lot size in order before you get comfortable and more consistent, and before you start trusting your analysis fully. You know, sometimes you have to take small lots like a 0.01 and watch that play out in your favor so you get a better understanding of how things work. Okay, so as you can see, we're going to keep going. And obviously price just continued up, right, as I already showed. Okay, so if you did not take the buys here, even though this is perfectly acceptable, you would have taken them on the break once again and then just continue riding the move up. That's all breakout trades are. You're buying on the break of the high or the break of the lows. So this is a buy example of a good higher time frame breakout trade. Okay, if you zoom out on the 1 day, on the daily time frame, as you can see, look what happened. It just rocketed up higher. We'll do one more candle. Okay, come on. Yeah, as you can see, it just literally rocketed up higher. Right here, the daily candle was a wick, but you have to understand that, one, this is not going to be a valid area of supply anymore because we already had the rejections. We already had a higher low point. We already had price break lower time frame structure. The overall direction was bullish. You have to understand these things. And then the next day we had a little pullback to retest this area, and then it continued. Okay. But as you can clearly see, after this point, it just continued higher. That's all a breakout trade is. And the same thing applies if you're taking sells. Okay, for example, if we'll look at something else right here, a previous area, right in this point. It's the same exact concept that I had just said. Break of the highs, continuation. Okay, this is the same thing. Break of the lows, continuation. If you don't see it right here, break of that blue line, break of the lows, continuation down. This is a breakout trade setup. They're not hard to catch. You just have to understand what you're seeing and not over risk and learn how to trade that type of style. Okay? All these different trade setups are going to be added to your utility belt, essentially. Your playbook. It can help you see these types of setups on the market for yourself. Okay? But learning what setups work consistently and are high probability is what's going to help you out in the long run. But when you're new, you don't necessarily understand what's high probability and what's not. You're just applying what you know and you're executing, and that's fine, but that's how you learn. But you can also wander around aimlessly for a long time. That's ultimately going to hurt you and cost you a lot of money. Okay, so same concept. Break the highs, higher high, break the lows, lower low. Right here. Very similar concept. That's all it is. Breakout trades are very easy. It's just learning how to time them and learning what the price action needs to do, the market behavior needs to do for these types of setups to play out. Okay, they're based off structure and price action just like everything else I teach. Okay, so here we have it, breakout trades. You're not selling the highs, you're not buying the lows. You're buying on the break of certain technical area. Buying or selling on the break of certain technical areas, which is typically structure or a break of resistance or break of supply or demand. Okay, so after going over breakout trades, we're going to look at reversal trades, tops and bottoms. Okay, now these types of setups require some patience and understanding what price needs to do when it hits a certain area. All right, because there's going to be times where you think you see the low or the high, then you're going to enter and it takes you out on a liquidity sweep, then the move happens. Okay, a lot of times you're going to have to wait for that to happen, for that liquidity sweep or that strong reaction, that wick to form. Okay, because if you get in too early, it's literally going to take you out because the market needs liquidity to move. So using that information, you're able to use discernment and patience and discipline in order to identify when that trade is actually happening. So for example, we'll go right here. Now I did not catch this move, but we're going to go over it so you can understand as well. You see that price hit this resistance and area supply here, and then came down to hit this level of support, which was also market structure. Now if we zoom out, which you consistently need to zoom out, you can clearly see, and I'll put this on split screen. I'll make this the 2 hour and we'll make this the 12 hour. This was a level of structure, okay? Higher low, higher high, back to the higher low point. Retest the area of resistance that it broke, as you can clearly see, okay? Clean retest. To catch these trades, I'm going to apply the ellipse tool again. To catch these types of trades takes patience and understanding what you need to see. You don't have to catch the very low point or the very high point, but you can catch it early on when you see on the lower time frame things are starting to transition, okay? So on the left, we're going to the 15-minute time frame. We're looking in this ellipse where this candle is on the right side, okay? I hope the split screen helps. It helps me a lot, and you're able to see what's going on two different time frames. That's building the overall picture, and that's what you're essentially doing. You're trying to understand what the overall picture is doing, piecing together the lower time frame and higher time frame, because the market is fractal. So now, look at this price action. This is that situation I was talking about where it could take you out first. So for example, let's say you saw the trade right here. You're like, oh, bullish engulfing candle. It's going to take off now. That's exactly what we needed to see. Oh, it didn't hit support, but it still may work. So you're going to set it up like this. You're going to target your level of resistance, target your area of supply. You're going to enter on this candle. And here, let's use the bar replay mode once again. I'm going to go right here. This is what you see currently, okay? Just pretend this is live market. This is what you see. You're like, yep, I'm going to take these buys. And let's go down to the 5-minute just to get a more refined entry. So you see that bullish candle. You're going to maybe enter right here on the next one. You're like, all right, I caught the low. It's going. And you're going to place your stop loss right below that low point because that's where you think the low is. And there's nothing wrong with that. That's what you should be doing, but it's about timing and where you entered at and if price already swept liquidity or not. So as you can see, you would have entered, you have been a little profit, and you're probably feeling optimistic going, yeah, I cut the low, price is about to go all the way up for 300 points, 250 points, and I'm gonna make a good profit on this trade. So what happens next though? Like, okay, there's some rejection, bearish candles are like, all right, bullish close, we're good. Then look what happens. Keep going, comes back to your entry point. You may think you're good, and that's just playing around, and then we see a dump. Okay, you got taken out, stopped out. Now you're questioning, oh crap, is it bullish? No, I don't think it's bullish anymore. Let's take sells. Some of you may flip your bias and then take the sells, going, yeah, it's going down. It's going to break this area. Stop loss like that. Then you're going to get taken out again because you should never flip your bias, because what you were seeing was correct, but you mistimed the entry because you didn't wait for the liquidity sweep or wait for the full retest. Now, price doesn't always have to fully retest, but most of the time it does. You just have to be patient and wait for it. See what happens. You take the sells, and now you're in a lot of drawdown, and you're gonna miss the move. Okay, so let's remove that. Let's back it up. This is what you need to see right here. Now I know this is the 5-minute, but we're going to go to the 4-hour on the right hand side so you can see. Now this comes back to the market being fractal and utilizing higher time frame and lower time frame to understand when price is lining up in order for that move to happen. So this is your first clue. Strong reaction from that level of support. We had what could be considered a liquidity sweep because it took out that low and then hit this level and then reacted as anticipated. So you could enter here if you really want. If you trust what you're seeing, your analysis is on point, you've been doing this for a while, you're confident what you see, you can drop down to the 3-minute time frame, 1-minute time frame, and really snipe that entry. So you're like, boom, 3-minute, we see this engulfing candle, I'm going to enter on the next candle, stop loss below this low. In theory, the market should not come back if this is the low point. Now, you don't have to have it that tight, you can make it a little wider. I don't have my stop loss that tight really ever, but this would be pretty safe in this situation. So now you entered on that. Now you're just going to trust your analysis and let the trade play out. And look, you virtually had no drawdown, if any. If you entered right here, you would have no drawdown. If you entered right here, you might have had a little, like 1 or 2 pips, but it ultimately went, okay? Now look what happens when you timed it right, using higher time frame, lower time frame, waiting for the liquidity sweep, waiting for price action to line up as anticipated. It's about patience and discipline. Now sometimes you will enter early because you're going to see the trade setup and you're going to execute as you should. But that comes back to managing risk and trade management. Because if you miss out on the first try, remember, sometimes certain trade setups take 2 or 3 attempts to catch. So, say if you're watching this and you got taken out on that one, on this attempt, this second attempt has a higher probability of working because price is moving as you had analyzed now. You have a much higher probability of this working in your favor. So now you caught the buys, and you're going to reduce your risk, place stop loss to break even, and just let the trade play out. Okay, and as you can see, it doesn't ever come back. It just completely moved higher, as you can see on the right-hand side, right? As you can see here on the 1 hour, this is how price played out, and is how it continued to play out here on the right-hand side. You're sniping it based off of certain technical areas. You have to understand where your point of interest are, where your areas of supply and demand, support and resistance, which they're technically the same thing. They both line up with each other, but it's understanding what price needs to do in this certain area, in these certain areas, with the overall context of the structure and the price action and the market behavior. So you can see it took off, and the breakout traders getting up here because they understand that, all right, most likely it's going to continue, so that's where I bought. And I don't believe I was even available at this time anyways to catch this move. But this is how you catch the lows. You have to have a point of interest, you have to understand what liquidity sweeps look like, and you have to understand what price action needs to do, what the market behavior needs to do in order for you to successfully execute and to catch these type of entries. So this is how you catch the lows for overall reversal trades. Now this is a continuation, obviously because the trend is bullish, but it reversed from this point. Price is going to continue going lower, but we found support and then it reversed the bearish price action and continue going higher. All right, so now let's try to find a sell setup, and we're going to actually look at this area right here, in this area of supply. So let's go down to the 2 hour. We understand this. This is where utilizing both time frames, or lower and higher time frames, comes in handy. This is what you need to do. You understand that, all right, price rejecting here, giving bearish candles. We can see on the lower time frame there's a lot of rejection, and you're getting confirmation for that here. If price was going to continue bullish, it wouldn't look like this, okay? It would never look like this. It's going to continue bullish. Let's go on the 1 hour on the right-hand side too so you can see. If it's going to continue bullish, it would look like this and break above and hold, have strong volume. We didn't see that here. We had bearish candles, did not hold. We have rejections. Here, broke above, strong volume, clean break, low volume bearish candles. And this is the hour time frame, the 1 hour time frame. Look how low volume these bearish candles are. It took 1, 2, 3, 4, 5, 6, 7, 8 hours just to come down to the low of this bullish 1 hour candle. That's a very strong clue that the market's not bearish. So back to this sell setup. We're going to sell in this area of supply here, and we're anticipating taking profit at the previous low point right here. Okay, so I'm going to rewind this from the bar replay mode so you can see. And I know a lot of these trades, this price action is already played out, but this is so you can get the idea. If you want to see this happen in real time, then you can consider joining my Telegram channel, joining my mentorship Telegram channel, and actually catching these trade signals that I'm calling so you can have practical knowledge and you'll have experience because you would have caught that trade yourself, and then you're going to study it and journal it, and then you're going to add it to your own utility belt. And by using that trading guide that I have, you're going to be able to look at that in the playbook and be like, okay, this setup does work. I'm going to use this consistently. Whether it wins or loses, it has a high probability of winning more times than not. So let's remove this ellipse. Let's remove these risk reward tools. And let's go back a little bit to right in this area.